Well, time to do a quick check on a couple of stocks as well. Siddhartha Khemka, Head Retail Research at Motilal Oswal Financial Services, joins us on the show. Hi, Siddhartha. Good morning. Thanks so much for joining in. Well, we're going to be having a couple of large trades that will take place today. Paytm, now, that's one of the bigger stocks in there. What's your view on that one? Promoter, not categorized as promoter. The P is selling some kind of stake. There'll be some flows that will come in as well. But at around 900 rupees, what's your take?
Yeah, very good morning, Nigel. Thanks for having me on your show. So I think we have seen a lot of block deals happening in the market in the past couple of days. That is a phenomenon. I think the lot of these promoters have been using the buoyancy in the market to use an opportunity and offload their stake wherever the stake or maybe an overhang was due because of the stake was anyways would have come, as we saw yesterday also in the Coforge deal. So overall, if you look at Paytm, I think our view on Paytm is very constructive, very positive, and this transaction only goes on to remove the overhang that the Chinese earlier promoter, now not classified as promoters, but they have reducing their stake. Earlier, we saw they transferring about 10% stake to Vijay Shankar's family, and now they have about 13% stake, of which about 3.5% stake they would be reducing. So overall, this is a positive step for Paytm towards becoming a full-fledged financial services firm in India, where the RBI is definitely looking at the promoter holdings and the shareholdings, where a Chinese shareholding definitely created a roadblock in the growth prospects. Core business, we have seen how the numbers have been stacking up. Past couple of quarters, the company has reported strong improvement in all the 3-4 segments that we are seeing, be it the GMVs, be it the disbursements or the subscription of devices. All of them have seen pretty strong growth, and we are expecting the company to report an EBITDA of 7.7 billion by FY25, which should kind of be a big positive for Paytm. We have a buy rating with 1,000 rupees of target price, and I think this is this step will only go on to increase the overall, remove the overhang of the Chinese holding in Paytm, and will go on to give more premium valuation to Paytm.
Okay, got that. Siddhartha, hi, morning. I wanted your thoughts on BEL. A lot of the defense plays actually have been in focus, right? But this morning, the Defense Council has approved a procurement of some warfare suites for helicopters from BEL. So, there's, extra work for them, of course. But this entire space has been rallying quite a bit. What would your top picks be here?
So, Sonia, I think the defense has seen a lot of momentum in the last couple of quarters, I should say, especially because of the large order books that these players have been getting. A big opportunity for them has also opened up in terms of the exports order book that they have started getting up. So I think defense is kind of a multi-year story from now. We have seen a lot of run-up in some of these stocks. Unfortunately, we don't have coverage on these names, so I don't have the valuation readily with me. But I would say that something like an HAL, BEL, these would be the preferred players within the defense space, given their the capabilities that they have, given their balance sheet size that they have, and the order book on hand. So I would say that the defense orders from the domestic markets, or the Indian government giving them orders, plus the export capabilities that they are building up together, provides a good growth opportunity for the Indian defense players.
All right, thanks a lot for that. But Siddhartha Khemka is still with us, so let's get a couple of more stocks going. Siddhartha, I wanted your thoughts on Bajaj Finance. Nomura has initiated a buy on the stock, saying that all the concerns on Jio Financial Services are now overdone, and they like the Bajaj Finance story quite a bit, especially after the dip. Would you concur with that view, and your thoughts?
Yeah, Sonia, so I definitely concur with that view. We believe that there would be competition in the market, maybe from Jio Financial. We saw that from a lot of host of other financial services companies getting into that space, especially the retail credit consumption, the consumption credit space, which has been the strength of Bajaj Finance. However, we have seen that Bajaj Finance continues to maintain the leadership within that space, and with its technological edge that it has. has been maintaining a very strong growth, especially if you look at in the consumer credit growth, a space which sees ups and downs. So I think we definitely have a very positive view on Bajaj Finance. We have a buy rating and a target price of 8,800. Geo Financial, if you look at bulk of the right now, the valuation comes from its treasury shares. The other businesses they are looking to get into, including credit, including insurance, AMCs, are just in the national stage and will take 2-3 years to unfold. What Geo will do essentially is expand the overall market size, which would help all the players, including Bajaj Finance, where Bajaj is expected to maintain the market leadership and hence a preferred pick within the NBFC space.
All right, Siddharth, what about from the banking space? AU Small Finance Bank is something that you like?
Yeah, Nigel. So we recently upgraded AU Small Finance Bank to buy. The bank was also part of our recent conference that we held, and in its CEO track, the company was very confident about the growth that it can deliver in the years to come, and it's aimed or the objective to transform from a small finance bank to a full-fledged commercial bank. If you look at the past few years, they have delivered, of the 6 years that they have been a small finance bank, they have delivered a strong CAGR of an impressive 54% growth in deposits, 34% in the loan book, the scale up of new products, geographical reach. All these makes us pretty positive. We expect the bank to have a 28% loan book CAGR over the next few years, which would be an industry-leading loan book growth. And there have been some concerns in the past with regards to some of the key employees leaving. There has been some concern with regards to the financials, but I think those are morely overdone. We have seen how the company has survived past several incidents, be it the demonetization, be it the GST implementation, be it the COVID era where the collection efficiency had tripped much below, and they have managed to come back strongly on back of their underwriting skills. So we expect a strong upside from the stock. We have upgraded the stock with a target price of 825, and see that the small finance bank, AU Small Finance Bank, doing well in the years to come.
All right, Siddharth, thanks a lot for that. Well.